to another Trading Fibs video. Today's video is going to be on Amazon. We're going to look at track progress from January 2023, this rally up, and looking at a double top possibly from February 2025, the pullback to April 2025, to the most recent moves in August of this year. So, and we're going to go ahead and start with the weekly time frame, draw our support lines and resistance lines, looking for price ranges. So I'm going to draw these out real quick. I'm not going to spend a lot of time on this. And we got a double top here. Okay, let's do one more right here. We may change those up a little bit, but those are the areas that stick out the most to me. All right. Now, this whole channel is based on Fibonacci sequence. So right now we're going to go ahead and count these waves, get a direction, and then zoom into a smaller time frame, draw out some more support and price, some more support and resistance lines on a smaller time frame. See if we can't get some projections on a smaller trade. All right, so when we count waves, we look for the initial 3 moves or 2 moves to get us started, and then we look for the third, always anticipating an extension in the third. That's what Fibonacci spirals and sequences are based off of. So we're going to start with the first 2 waves in a major degree. Look for the extension in the C, and then once we figured out this is complete, then we'll label the entire move in a bigger degree, and in this case an intermediate degree. So let's start with the major. Here's our A. Here's our B. I'm going to get rid of the oval. Now we want to start measuring to see if we find any similarities in moves. Here's our correction on the 261.8. Let's remeasure that with the wick. This is right on the 200. I like that one. We're going to notate that on the first move. Now we take the whole measurement from here, because it's an extension of the first move. We have a correction on the 161.8. Let's measure it from the original move from B, see if we get anything that sticks out. I do have another 200% right here at this top, so this is pretty common from this move. These are both 200% moves right here. So that's a similarity I want to notate. So in that case, let's measure these 2 swings. And now we get a 138 at this top. So now it's telling me that anything below the 161.8% is going to be a bearish move. So maybe this is looking to correct. So this may tell us that this whole move is done. So now I'll keep the Fibonacci extension out there. It's actually the retracement tool, but I use it for the extension. Alright, so let's label the internals of the C leg. So this is going to be an A here, B here, and a C here. That means the internal of this A leg was in the minute degree. So this is A completed there. This B completed here. And they all share the same extended C leg. So these 2 C legs, no, 3, really should be more like this. Let's see. More stacked than linear. Okay, so these three C legs make up the intermediate A wave. So that's telling me this next move that is happening right now could be an intermediate B leg. Now, these B legs are very difficult to anticipate and forecast, so you need to be able to read other types of indicators and be proficient on that. So that will help with the move. I can get into the internals and still use the Fibonacci derivatives, but other indicators are also helpful. So right off the bat, we notice a double top here at 236 roughly. Okay, so that's another indication of a possible correction. We have some moving averages that are below the price. You can see here in red, purple, and blue that maybe price is going to want to drift back towards these moving averages. So now that we have our support and resistance price lines in, I'm going to get rid of this Fibonacci derivative here, and we're going to zoom into, we're going to go right to the daily time frame now. Okay, we're going to focus on this entire move here. So this is start at April 9th, April 8th, I think is what it really was, April 7th, okay. And then we're going to, I see a correction here at May 1st, and then finally it ended here at July 31st. So again, let's do the same thing. We're going to label these A and a B here and follow through with the extension. Alright, so this one is our A. This one's our B. Now we need to find where C completed. Okay, so we have a 161 here on the May 14th correction. You can see that price rose above just a little bit. So now let's measure that first leg. We're not going to take it from April. We're going to take it from, well, not April 7th, but April 21st. And here you can see still this top hit a correction fib at 138.2. So it's telling me again that this is still corrective. Alright, so still need to get some more information. Alright, so again, this is telling me that here could be the top of C in minute degree. Now, let's focus on this move. And on this one, let's go ahead and draw in one more supply and demand zone, or support and resistance. Let's try to focus on this one a little bit more. I see this wick here was a nice reference point, and these two here, these three wicks. Now obviously the moving average on this one rejected that price, so I'm going to ignore the moving average and play it according to this wick here, because it also touches here and a body of a wick here. So I'm pretty confident that is going to be a significant price range. So I'm even going to enlarge that one, the width on that one. Let's just make it 3. Makes it a little bit brighter. Maybe draw one more, because this is kind of sticking out to me right here. What is that? This is 227.05. We got a body, 2 bodies and a wick, 3 bodies and a wick. I like it. We're going to draw this one in yellow. Alright, so now let's see anything else we can get from this move. One thing is what I'm noticing is from this high here on July 31st to this retracement at August 15th. I know it's a lower high, but the retracement is deep enough to tell me that we may be looking at some kind of triangle pattern to form, if it already hasn't. So we'll come back to it. So anything else that sticks out besides that retracement? Maybe this candlestick looks like it's about a 50% retracement. So let's find out where that pullback was from. It was okay, I'm gonna have to get rid of this for a second. Remove that. There's the 61.8, so that's pretty close. We'll go ahead and say that's a 61.8 retracement. And that this, yeah, I think this might be the triangle. So if that's the triangle, triangles move in 5 swings. Let's see if we can draw a trend line to help us out. All right, and in this one I'm going to do a lower degree in blue. So there's an A. And this could be a possible B. Triangles can be very irregular in their pullbacks. Or it might be early on in the triangle and mislabeled, but we'll know. It'll give us still a good general direction as we're moving on, as we're tracking. So A, B, C, D, E. So maybe we're looking for a higher high than this, but it'll be a false breakout, so we'll move up and then maybe fall down for a bigger correction. So that's one possible scenario. Let's see if there's anything else, because we're going to go down to a lower time frame here in a second. Try to catch this move. So yeah, let's just go ahead and do that, I guess. Oh, okay, one other thing. We need to measure this move against this move. Alright. So this is the actual Fibonacci retracement tool, and this was a perfect 61.8% pullback. So that's telling us that it could be a possible start of another rally up also. So right now, even if it's a triangle and even if it's a start of another leg up, the general direction looks like it's to the upside. Moving averages, on the other hand, looks like short term we need a little bit of a pullback. That's why I say now we need to focus on these 3 candlesticks. This is the daily time frame. Okay, so now we're going to go to the 4-hour. Not for very long here, because I don't think it's going to give us any more information than the daily did. Just trying to see if there's another supply zone here. There might be one right here. Now once we get to the smaller time frames, I'm going to put these all in white. And there's one, and then this one will be resistance, looks like tomorrow at 229.90. Okay, We've got some moving averages for our pullback. We need to measure a 61.8 because that looks like the fib that it wants to hit for retracements. Looks like a triangle here, so we're going to take two measurements. We'll do this one first. So this 61.8 puts us below all of the moving averages. It's interesting. Let's see, and this one probably be the same, right? Yeah, but it overlaps with a price level. So I bet we get a strong rejection off the price level, maybe close on the moving averages tomorrow. So far, that's what I'm leaning towards. All right, let's do one more measurement here. Also, this chart is on a log scale. If I take it off, it doesn't really change too much on the 4 hour. All right, just FYI. All right, so all right, here's a 123.6 fib. A strong rejection off that. That's bearish. So yeah, I'm thinking a pullback. I'm really leaning towards this move here, and then at least a bounce to 50% of that. Because we said the general direction on the chart is to the upside, more than likely. We always follow the trends on the lower time frames to help track that decision that was made on a daily or weekly time frame. So at this moment, let's just go to the 30-minute time frame real quick, and we'll track the rejection off the 123.6 fib, which is right here. So I'm going to put an arrow indicating this is our focus point here. All right. Notice these price points here. 1, 2, 3, 4. 4 times it's rejected off the 220. Definitely is there's so many patterns right here that indicate a reversal, and it's just you get that kind of price action when you see something that's just so obvious. So and it usually when it's like that too, these types of shallow corrections would stay at this price level. So I'd be surprised if it came back to this 224 area, but just looking at all of that. But I have to kind of go with what I know here, and we've already looked at a lot of the retracements from past history. So past history is going to try to tell us a little bit of what the future might bring. So so overall we're looking to go to the upside, so maybe we're looking for the best entry possible. So I would say I didn't catch that price zone. What was it? 224.14. Yeah. And then 224 to 227, depending on your trading strategy, would be a target. I guess we can let's put 3 targets up there. Let's do that. I think that's the best. So I'll do T1 for target 1, and that's going to be right at this 227.12 level. Target 2 is going to be at 229. Looks like 229 even. Let's do 228.90. And then target 3 is going to be at this level, at your this price level. So let's make sure that we got that price level pretty secure here. I think I can move it up. We'll do that 230.05. It's actually right there. All right, that is it for today's video. Hope that helps, and until next time.